following the previous episode where we covered the basic usage of the Unentangle indicator. Today we're going to continue from there. If you haven't watched it yet, check out my video titled Asterisk Exclusive. Precisely identify market tops and bottoms. TradingView Unentangle Introduction. Asterisk. Today, we'll walk through a real example to backtest and evaluate a trading strategy. Unentangle supports multiple strategy backtests, and this time I've selected one of them. The logic is simple. It's based on the dual timeframe trading method from Chan theory. The longer timeframe should be 4 to 5 times the length of the shorter one. For this demonstration, I'm using QQQ as the underlying asset, with a 30-minute long timeframe and a 5-minute short timeframe. Let's jump into the chart. On the QQQ chart, click Indicator, type Unentangle in the search bar, and you'll see the indicator appear. Today it shows a green box. Then we use the replay function and move the time back to the start of today's session, just like I'm doing now. After the market opens at 9:30, we'll observe how the price moves. Before watching the real-time movement, we first switch to the 30-minute chart to determine the major trend. On the 30-minute chart, we can see the current trend is upward, with a probability reading of 21%. Switching to the 5-minute chart, the trend is downward, with a probability of 75%. From this data, the long time frame is still in an uptrend. The short time frame is in a downtrend, but it's already near the end of that move. This is an excellent opportunity to go long. Let's clarify today's core strategy. Since we expect the market to rise, we will only take long trades, no shorting at all. Whenever the price pulls back, especially after a consolidation, a central axis or pivot zone, we buy near the bottom of that zone and then hold patiently until the close. With the strategy clear, let's return to the chart. Now we start the playback. Because we expect to go long, we buy right at the open, around 618. Then we continue watching the movement. As expected, the market rises and then pulls back. Now the price has dropped below the indicator box. This is our buy zone. We decisively buy again, around 618. The market then rises again, and we hold firmly without making any moves. Another key part of our strategy is to buy at the lower edge of the consolidation zone once it forms. Since no consolidation has formed yet, we wait patiently. Later, a new consolidation forms. According to our strategy, we buy near the bottom of that zone, this time around 620. After buying, the price doesn't move downward, so we continue waiting patiently. Soon, another consolidation forms, with its bottom around 621. Another consolidation forms again, and we buy decisively at 621. Finally, the market closes at 622. Let's summarize today's trades. We made a total of 5 long entries. 2 buys at 618. 1 buy at 620. 2 buys at 621. Based on today's closing price, we earned about $10, roughly 1.6% profit. Now let's look at the current trend. The 5-minute time frame shows a 71% probability of an upward move, meaning the short time frame is already at a relatively high level and may face downside risk. But the 30-minute long time frame is still in an uptrend, with a relatively low reading, indicating stronger trend stability. So for tomorrow, a conservative approach is to hold the position and do nothing. A more aggressive approach is to sell a small portion to lock in some profit, but remember to buy back at a lower level, or you'll miss the move. Of course, you can use Unentangle to develop your own strategies. For more details about Unentangle, visit https://unentangle.infinityfreeapp.com/h/index.html. Final reminder asterisk. The stock market carries risks. Invest cautiously. This channel does not provide any investment advice. Please take responsibility for your own decisions. Don't forget to like, subscribe, and share this with your trading friends. See you in the next video.